Hi everyone, welcome to another honeystocks.com analysis, and this one's going to be going out on June 26th. Now, before I do the usual and switch over to my screen share and walk you through a lot of the charts and I guess all the ideas that everybody really tunes in for, there's a couple of things just to kind of get out there off the bat. The market's obviously been incredibly, let's call it rotational. I think, the theme of the messages and the emails that I tend to get is, Sam, what's happening? Why are we getting all these rotations? Now, I think the easiest way to explain it is with any bull market, which is what we're currently in, the market's pushing up against all-time highs, making new all-time highs left, right and centre. We have rotations. It's part of the deal. We can't do anything about it, but it's interesting. It keeps me on my toes. But I do have lots of charts that I'm going to walk through today. I think I've got around 30 prepared and around 25 individual names that I think you should add to your radar for the forthcoming few weeks. I'm also going to be giving an overview of what to expect in July. Historically, what has July looked like and what areas are poised to break out and make new all-time highs with individual sectors, and of course that translates into individual names that I have prepared for you as well. Now, I'm not a day trader, most of you know this. Although I use technical analysis, my time horizon is weeks to months. So if you're a day trader, if you're out there slinging weekly options hoping to get rich quick, this is probably not going to be for you. My time horizon for my work is a little bit further out, but feel free to check it out and maybe you'll get some use from it, and I hope you get some insight as well. So let's switch over to the screen share, let's dive into the charts and let's see what the market is telling us at the moment. Now, before I get into this, as always, please do pause the video. Make sure you're comfortable with that. Basically just says there's not any investment advice, and for you to do your own due diligence, of course. Maybe to give myself a little bit of credibility, I'm registered with the CMT Association, working my way towards my chartered status, and technical analysis is something that I'm widely known for. I do this professionally. And if you get some value from this, although I only upload roughly once a month, feel free to subscribe to the channel, hit the notification, and you'll be informed whenever I do upload something. Now, I think the logical place to start is probably just giving a 5-minute broad market overview, show you some charts that I think are poised to perhaps outperform throughout the month of July. Of course, with the market being the market, I can change my thesis on 30 seconds notice. That's the game that we all sign up for. So, although the analysis is going out at the end of June, within a week or two, my thesis could have changed, but that's where your own due diligence really comes in. Now, this is my chart for the S&P 500. Now, this has been my chart for months, and I still see a further bit of upside here. This is the level that I'm watching. For those of you that maybe don't understand technical analysis very well, I'm using Fibonacci because I can see that for this particular chart, Fibonacci has some merit. So I actually expect a little bit further upside. I'm not one of the doom mongers that's calling for corrections or crashes. We just had one. So, I still see further market upside. I think with the Dow is in a bit of a consolidation holding pattern at the moment. Given the high correlation between the S&P 500 and the Dow, you would expect, if a bull market is going to start to take the next leg higher, you would expect the Dow to participate and break out of that range. But at the moment, I am viewing it as a bit of a channel at the moment. So again, we'll see how this one develops. The Russell 2000 at this exact moment in time is now pushing up against all-time highs as per the chart. I'm sure you can see that there's a little bit of resistance there. So, what's going to happen here come next week? Are the small caps going to decline, or are the small caps going to break out? I think if there's a breakout in the small caps, I think it makes a lot of sense that this would be an area of focus. But at the moment, I think any new positions in small caps is probably a little bit, you know, in my view, it's a little bit risky. But you know, if you're betting on a breakout, then you know, crack on. But I prefer to wait for price to break out and tell me what it wants to do, because I've seen it a million times, as I'm sure most of you have, that price could rapidly decline from these levels. You know, whatever you think, technical analysis does offer some insight. And we've got the triple Qs that have, of course, broken out. Now, something that really bothers me is this, I guess, over-reliance on breadth data. Now, breadth data is, of course, useful to any decision-making process, but something I see, you know, especially amongst professional analysts, and this is no slight on anybody's work in any way, shape or form. I've got a huge amount of respect for many of you that I'm sure are watching this as well. But when we have a decline in breadth, you know, when we've got this decline here, we can see that the percentage of stocks trading above their 50 SMA, of course it's going to decline. But when we get any declines, especially in a bull market, we all understand that there's going to be an expansion of that breadth. So I place very little emphasis on breadth data. I actually use it to just help me to gauge when to buy back into the market. We're not the same environment as what we were 18 months ago, where we had a complete collapse and crash, and of course the V-shaped recovery. But I'm seeing an expansion of breadth, and for me, very, very logical, and it's something that I've walked through with my clients and members over the last couple of months, that this decline in the triple Qs has felt like 2 other occasions over the last 12 months, and of course it's helped many of our clients and members to buy back into the market. And I'm noting that we have rising relative strength within technology. Now, what areas of technology can be an area of focus? Well, it makes a lot of sense to me that growth is an area of focus. Last week, when we had the breakout in IWF, that was the signal for me to inform our clients that growth would be an area of focus for the forthcoming week, and of course that's exactly what we've seen. Now, we know the natural movement of price is for it to break out and come back to retest these levels. So I would expect a little bit of a pullback in growth over the coming week, but I think provided the key technical levels are respected and the support is respected, and provided we don't start to break lower here, that would be a big problem for me. But if we get a pullback, provided we stay above these levels, then I think growth makes a lot of sense. Now, this is a monthly chart comparing value to growth. What I'm noting here using the monthly chart is at a very, very logical level, we've got value now starting to fall away. So what this chart is essentially saying is growth is the area of focus. It's outperforming value at the moment. For a while there, of course, when we had this uptrend here in value in the ratio, value names were the place to be for a few months, and hopefully many of you had done very, very well on that. But what we're seeing here is a very logical rejection at a logical level, and you know, again, it's technical analysis. It just helps the process. Now, for the forthcoming month, there's a few areas that I think warrant some consideration. Of course, technology, XLK looks like it's breaking out, as you would expect with the triple Qs. But what areas that I'm looking at are maybe areas that are maybe not on everybody's radar. For those of you that maybe just look for the areas that are, I guess, breaking out to new all-time highs, I also like to look at the areas that have perhaps underperformed but are now starting to show signs of life again. And I think the solar ETF makes a lot of sense. Now, I'm not necessarily saying go in and buy TAN, but there are individual names which I have prepared this week that I think you could probably add to your radar. So if solar is going to start to make a run here, then there are individual names that I think warrant some consideration. We've got XBI, biotechs. Now, I have called a bottom on this a couple of months ago when we had this bullish divergence. And of course, I think we're up maybe 16-17% from its lows, and it does look like it's starting to break out again. Now, for those of you that maybe don't, watch my social media, and I would understand why, it's quite a boring endeavor. I posted a chart just showing the seasonality of biotechs over the last 20 years. And for those of you that maybe don't know, July for the biotech space is generally pretty good. So I think biotechs makes a lot of sense. I think we're probably setting up here for a potential double bottom breakout in the semiconductors. Now, something that I fully accept as well is that, with semiconductors, we could quite easily just start chopping sideways until it breaks out. I don't know what will happen. I'm not predicting a breakout, but what I would say is that if it does break out, it would make a lot of sense to start to identify some of the names. And of course, I have a few names prepared this week for you. So that's really the broad market overview, some of the sectors that I think are worth watching. Now, to get into the individual names, now for those of you that maybe don't know, shipping costs have gone through the roof over the last 12 months, of course, with COVID and import, export, etc. But it looks like ZIM, Integrated Shipping Services, is breaking out here. Now, it has been consolidating for the last month. This is one that I highlighted to our clients and members on this breakout here, and it's been doing pretty well. Long may it continue, but again, I think it's worth adding to the radar. VALE, non-energy minerals, very simple chart for me. When it does break out, it has a history of doing pretty well, and it's consolidating, and it has done since the middle of May. So I like VALE above 23. It did try to make a run for it today, but ultimately fallen away. It's one of the reasons why I don't tend to buy intraday breakouts. I tend to wait for the close of the day for price to confirm a breakout. I just find it safer and a lot easier. There's a lot of nonsense with how to trade breakouts, etc. that does the rounds out there. But for me, close above $23 would make a lot of sense. Moderna probably plays into the biotech theme a little bit. I think we're looking above $228 as per the chart. Enphase Energy, walking back to the solar theme. I'm looking for a breakout again. This is one of the reasons why I don't buy intraday breakouts. It tried to make a run for it today and it's ultimately fallen away. But I think if we can get a close there around 180, and of course a continuation day or a follow through day, as some of you might know it as, I'm looking for a breakout. Now, some of the things that I look for as well with breakouts, I don't like buying breakouts when RSI is monumentally high. I like there to be a little bit of room to run with RSI. I like to have good relative strength. So relative strength is a comparison to the S&P 500. When this line is rising, it means that lots of people are wanting to own the stock and do own the stock. It's comparing relatively better to the S&P 500, and this is what it's all about. It's about identifying the relative strength. Peloton, again, it looks like it might get a breakout. I think it's worth adding to the radar. Apple broke out 2 weeks ago above this level, and of course I think it's broken out again. It's consolidating over the last couple of days, but I think if it's going to test its all-time highs, I think that's about 10% further upside there. So again, Apple's not going anywhere anytime soon. Like an absolute idiot, I decided to sell my long-standing position here when it broke below the 200-day simple moving average. Of course, regret, but bought it back in again on this breakout, and again we'll see how it develops. But Apple looks to be doing pretty well and looks to be on the road to recovery. Now, I think with C Limited, it looks like it's had a breakout over the last couple of days, but today, Friday, as I'm recording this, it is struggling a little bit. So again, we'll see how this one develops next week. But I think if we can get this corrected and we can get a further move to the upside next week, I'm using Fibonacci here. I think there's a further 20% upside, and it looks like a pretty obvious double bottom. PLTR, Palantir Technologies, whatever you want to call it. I like it above $28. I think we've got a breakout in CrowdStrike. I'm viewing this as an ascending triangle pattern. So again, I think it warrants a bit of consideration. Plays into the tech theme. Now, for those of you that do follow my social media, I posted a couple of weeks ago the breakout in natural gas. Now, I understand that most of you watching this will not necessarily buy commodities or trade commodities, and that's fine. But something that I think is missed by many, especially newbies, if there's many newbies watching this, when we have breakouts in individual commodities, it means that you can go and have a look at the individual names that are perhaps aligned with natural gas, for example. Now, this is a name for disclosure. I own plenty, and this is also one we sent an alert for our members and clients on a breakout above $10. It was also first covered back here, and it's obviously done very, very well. But this kind of goes back to the natural gas theme. If natural gas is breaking out, what are the names that you want to own? Well, you want to own the names that are showing the excellent relative strength. And of course, Antero Resources, I'm sure it's a company that many of you have never heard of, but you know, it's not all about Microsoft and Apple. This is where a lot of the big returns are made, and it's about staying in the trend as long as possible, and it's why I'm not in the market for little $1 or $2 moves. Caterpillar, now I posted a couple of charts to Twitter. So when Caterpillar broke down below the 50-day simple moving average, I got asked a lot, well, how did you spot that? Very, very simple. I was using the 50-day simple moving average. Of course, we can see that it has a lot of merit for this particular chart. As soon as you break below it, that's where the defensive action comes in. So I posted to Twitter and just said, look, trend ended. The thing dropped 9-10%. I posted that on the 10th of June. And then on the 18th of June, I then posted, expect a short-term counter trend rally. Which is exactly what's happened. Now, the reason for that is the RSI momentum was massively oversold on a really good stock, so you would expect some sort of buying to kick in. That's exactly what we've seen. But how far is it going to go higher, or is it just going to start a downtrend here? I have no idea. But I got many questions on this one. And I thought I better just cover it on social media, just with my monthly analysis. Crocs, new 52-week high, looks like it's broken out again. What I like to look for is room with RSI to run and excellent relative strength. There was some guy, I think last month when I included Crocs, who said that I didn't know anything about technical analysis because this gap was going to get filled. Well, not all gaps get filled, and you know, to the individual in question, maybe you're watching this as well. This is something that you learn with professional technical analysis. Some gaps just don't get filled. They're called breakaway gaps. So maybe if you're watching, there's some education there for you. Now, with Google, there is further upside. Now, what I wanted to do with Google is just add in the Fibonacci. Now, very similar to the S&P 500 chart that I walked through. We can clearly see that Fibonacci for this particular chart has merit. So I'm using the 2007 declines and obviously plotting the extensions. So what does that mean? Well, there's a bit further upside here for me. Give me just 2 seconds. Yeah, so from here, from this breakout point, there's 18%. So there's probably about 14% further upside. I've got a target there of about 2,900. Now, what I would say is they are minimum targets. Of course, we know that with any stock, they can trend for months and years. So that's a bare minimum as a target. And of course, if we start to break below key levels, then all bets are off. That's something that technical analysis helps us with, is, you know, always identifying where your thesis is proven to be incorrect. And for me, if we start to break below key levels, that's a problem. Microsoft is getting a lot of attention at the moment because it's obviously broken out. It's a true $2 trillion company now, for those of you that care about that kind of thing. But one of the reasons why this hasn't been communicated to our clients and members, and it's something, it's the little details I think that are missed sometimes, especially if you're in the habit of maybe buying breakouts. When we get RSI in this range, we can see very, very clearly that it tends to be a level where Microsoft sells off. Now, when we add in the nature of the chart, yes, it's in an uptrend, but it's a choppy, stressful uptrend. I don't like these types of charts. Now, in saying that, this is one of the names that I own in my long-term portfolio. I'm okay with Microsoft, I'm sure most of us are, but when we're at the top of the range, it tends to be a selling point. So if you're going to buy the breakout, you'd probably want to see it break above this RSI level, and of course then it can just start on hopefully a big monster run higher. But you know, that's a breakout I probably wouldn't buy. I'd want to see RSI breakout. We've got Plug Power, clean energy, has caught a little bit of a bid over the last few weeks. I like Plug Power above 34.50. We've got Snowflake above 256. Now, I'm not going to get into valuations of companies and the fundamentals. I fully understand that there's, you know, a possible issue with the valuation of Snowflake. But that said, if it breaks out, you'd probably want to buy it above 256. Square Inc. For disclosure, I own plenty Square Inc. Bought it at the bottom of the range here, and I've been accumulating on this uptrend. But ultimately, I have an upper target here of about 280, but it has broken above the 50-day simple moving average. So I think it makes a lot of sense. Good old Amazon continues to chop about sideways. I get a lot of questions on this particular name. I don't know if it's going to break out. All I know is that this is a very clear level for the stock, and if you are an owner of Amazon, this becomes a target for me. And of course, that's technical analysis. Amazon could absolutely break out and move higher, but for me, Amazon's probably turned into one of those old dinosaur valuation names. You know, the names of the past, the General Electrics. Yes, it's the biggest, you know, one of the biggest companies in the world. It's a great company, but the stock price is just chopping about sideways. And then when you have this big range, the only play that makes sense is to buy at the bottom and sell at the top. That's something that's, you know, massively profitable if you're able to do it. But if you're a long-term investor there, I guess, of Amazon, this is probably a bit of a headache for you, because the last thing you want is it for it, you know, to drop to the bottom of the range again. But for me, if it breaks out, Amazon could absolutely, you know, really get going. The market just to clarify, can keep going higher without Amazon. Amazon's done nothing for 18 months, but the S&P 500, has just kept ploughing on higher. So, if you're in there and you're in Amazon, hopefully it breaks out, but it's one of those names. It's just, I think all the alpha has probably been made at this point. There's been a big breakout in Match. For disclosure, I covered this one with our clients and members last week. Big breakout. I would expect a pullback given the run that it's had over the last 10 days. But we know with uptrends, pullbacks and uptrends oftentimes offer opportunity, as I'm sure many of you have heard me say. But again, I like Match at the moment. Capri Holdings, I'm viewing that as a triangle breakout. MGNI has had a monster week. Again, for disclosure, I own Plenty Mag MGNI. This was an alert that was actually sent out to our members this week as well, and it's off and running. I think it's probably up 12-13% at the moment. But yeah, it's breaking out. I think there's a lot of upside potential in that name. Blink Charging. Now, for those of you that pay attention to short interest, this is obviously a name, and I think it's something to highlight here. When you have massive short interest like this, there's added risk to it. So what I probably prefer to do nowadays is, rather than buy the underlying stock, I would prefer to use risk-defined options. So I think something to bear in mind, and I posted this chart, I think, to social media a few weeks ago on this breakout. It's been consolidating over the last couple of weeks, but I think Blink Charging is probably gearing up for a potential breakout here. If that is the case, given the short interest, you could find that the options might be quite profitable, but it's not one of those that I would be going, big or go home type of thing. But certainly it's risk defined and it's a potential play there. We've got Cloudflare. For disclosure, again, this is one that was communicated to our clients and members when it broke out. It has now closed above a significant level, which is the $100 round number. These psychological levels are very, very relevant. We've got good relative strength to the broader market. So I think probably what I would be doing here, given the RSI is up at 78 at the moment, I'd probably just look for some kind of consolidation, some kind of pullback over the coming few days. But again, I think provided it stays above $100, then I think it's a pullback that can be bought. I think if it breaks below $100, certainly below 98, it's probably a problem. SunPower, again, plays into the solar theme. Interestingly enough, although we had this massive decline, it never reached oversold conditions. Now that's something that I particularly look for, because when a stock hits oversold conditions with RSI, that's generally a characteristic of a downtrend. Now, many of you who use technical analysis will have learned the kindergarten trick where you buy stocks when they're oversold and you sell them when they're overbought. But what many fail to understand is that you want to own stocks that are overbought because they're in uptrends. This is why, when we're looking for breakouts, I like there to be, room to run with RSI. I like to buy breakouts when the RSI is maybe at 65, maybe 70 at a push. Any higher than that, then you can reasonably expect a pullback, and probably a retest entry is more appropriate. Big breakout in Twilio. I think it makes a lot of sense. Plays into the technology, software as a service theme. Yeah, I like it a lot. It was one that was communicated last week to clients and members. Applied Materials, this is one that plays into the semiconductor double bottom theme. I first covered Applied Materials when it broke out here, and at the time there was 40% upside target. Now, of course, since then the market didn't really like that very much, so it pulled back, which is fine. The market's allowed to do that, and we're able to manage risk, and nobody takes a loss on this move. But I think potentially there's a breakout here on the horizon with Applied Materials. Going back to some of the names that I look for that have been beaten to death a little bit, but maybe offer opportunity. I think Mercado Libre, Argentinian Amazon, I believe. But yeah, it's broken out back above its 200-day simple moving average, back up above these Fibonacci levels that I like. And it's very easy. I like trades or investments where I can define the risk quite easily. And I think if it breaks below the 200-day simple moving average, then that's maybe a problem for me. There always has to be that easy get out. And we also have Garmin, which I like above 146. I believe they're the fitness watch makers. I prefer the Apple Watch. It's a very useful tool for monitoring my daily activity. But I believe Garmin are pretty good as well. And of course, I like it above 146. But if you're somebody that maybe struggles a little bit with technical analysis, feel free to stick around for a second. But if you have got some value from that, please do subscribe to our channel. Like I said, I upload usually once a month. I'm way too busy nowadays to upload like I used to every week. But I'm told that the analysis I provide is very, very good. So feel free to go and check that out. But if you are perhaps new to my work, feel free to jump on to our website at honeystocks.com, technical chart and research. We provide very detailed weekly analysis. We provide an annual membership, and with our annual memberships we provide our premium weekend analysis, very, very similar to what you've just watched. We provide it every week, although a very shortened version, I should say. We provide trade ideas. I'll show you what that looks like in a second. We also provide a bite-sized halftime analysis every Wednesday. We provide a trading community. So there's a few hundred members that are all part of a really knowledgeable community, lots of professionals. It's not a community full of day traders. There's a lot of very smart individuals. We're talking doctors, lawyers, well-educated folks. We've got charting support, so if you're somebody that needs a second opinion on a chart, I'm always on hand during market hours to provide charting support. And of course, we also include within our membership full access to our technical analysis program, which we used to charge a lot of money for. That's all included within our membership, so feel free to go and check that out. Just need to click join membership here, and you can go and I guess see what that's all about. But this is what our trade alerts look like, our investment ideas, as I prefer probably to call them nowadays. But this is a recent one for Cloudflare. I think I walked through this chart before, but we very clear instructions on it. We provide at least 12 hours notice for every single trade alert, and this is up at I think 104, 105 at the moment, and obviously doing very, very well. This is the alert that we sent out for Antero resources above $10. That said, it was first communicated back here. It's obviously up 55% at the moment. Square Inc was another recent one, buying at the bottom of the range, selling it at the top. It's doing very well. Yeti was a big winner. Plug Power was, I think it was like 400% last year for everybody. So that's really what we do. But the unique thing about what I do is I offer complete and open transparency with my work. Every single idea, alert that has ever been posted to our group and our members is logged fully on our website. So feel free to go and check that out. You know, see if the types of stocks that I recommend are the types of names that you typically like to buy. If they are, then you know you might have found a good home, but I'll let you go and do your own due diligence. And of course, you know, 2021, these are all the ideas that have been posted so far. Some of the I guess the testimonials and some of the gains got ARPAN 600% on options. Now, something to say as well is understand that there are many ways to navigate the market. Some of our members, like me, buy the underlying common stock. I do dabble with options now here and there, but some of our members are exclusively options traders. And again, 7,000 profits on Tesla. Somebody's on 40% on Dogecoin. But again, this is Vince. He's been a member with me for 3 years now. Humbled to say, second year in a row, trading account is up over 100% for the year. So there's quite a big mix. Jamie, 96 to 160k. So, feel free to go and check that out. But I think if you're somebody that's maybe struggling with day trading and have maybe realized that it probably doesn't work that well, maybe you want to learn technical analysis, maybe you're just too busy to filter through thousands of stocks, or maybe you just want to be part of a community, it's probably a good place. But it's only $500 annually. Typically in any given month there's 20 memberships available, so feel free to go and check that out and have a good look over our website, and like I said before, do your own due diligence. But whatever your deal is, I hope you've got some value from this. I hope you've got some insight, and best of luck in the markets over the coming months. But from the bottom of my heart, thank you very much for watching, and maybe I'll welcome you soon. Thanks.